Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 21st of April, 2022. This is episode number 2217. If this sounds repetitive to you every day doing the exact same thing, I want to tell you that that's really the goal. Keep a process, and that's what I'll be talking about this afternoon at 1 p.m. Eastern in a public webcast that is about how to grow a small trading account. Make sure you sign up. There's a link to that in the YouTube chat, in the YouTube video, and also on Convergent Trading's feed. Again, this is episode 2217. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we see a mild risk-on sentiment. The U.S. indices up, as you can tell here, 68 basis points to 127 basis points, with the NASDAQ being heavy. Tesla, and with Tesla being 9.47% currently positive, up on earnings yesterday. After yesterday, it is definitely lifting many other stocks across the board. We're seeing Amazon up 1%, Apple up 1%, Google up 1%, Microsoft up 1%, and so on and so forth. And so the market's very bullish with these decent earnings. Also seeing positive earnings out of the Eurozone. Russia escalates in Ukraine, takes Mariupol. Apparently there's a ban on flies coming in and out of the war zone now because they've got it locked tight. And then claims in the U.S. came in at 184,000 versus 180 expected. If you recall, last week it came in relatively higher than expected as well. Seems like there's a little bit of softening there. Philly Fed came in at pretty weak at 17.6 this morning versus 21. Business confidence out of France for April, 108 versus 104 expected, pretty strong. And then today we have BOE's MAN, and then we have consumer confidence flash for April at 10 a.m. At 10 a.m. And then Fed's Powell, it says here 11 o'clock, and then also 1 o'clock. And then this evening, a key figure, inflation rate out of Japan year on year at 7:30 U.S. Eastern time. And that's what wraps up the day. Again, we're seeing also a pop in crypto as well. Crypto has been in a bit of a range, coming off and kind of bouncing off of 40,000 in Bitcoin, 3,000 in ETH. I think it dropped a little bit below that. So we're seeing a little bit of a pop there. As far as the S&P, and crude, it's interesting. It came off yesterday. It went to $100 yesterday and put in a V bottom and came right back to about 103. And then this morning, it's just been mostly sideways. Crude got as high as $104.32, currently trading at 103.44. It's just as the Europeans talk about constraining crude imports and so on, crude oil's reacting in that way. So that's where that stands. The S&P, turning our attention to the S&P, 154,000 contracts is lighter than we've seen over the last few days at this point of the day. 100% of the inventory is long, meaning all of it traded above yesterday's settlement, which was at 44, 55, 75. We're currently trading, as you can see up top here, 44.94 in the S&P. S&P opening in a gap again, relatively strong, lifted mostly by Tesla again. The range is 30.75, point of control 44.90, really poised to attack 4,500, which was what was expected yesterday. Here's what I put down as a plan for yesterday. I posted this on Twitter as well. Talked about a break through the overnight high to take out the stat. Looking for 84.85 test. Was looking for it to drop to 60 or so with a back stop at 50 yesterday. And then for it to really start pushing towards that 4,500 up here, the next key balance area. And we couldn't quite get there. We ended up with a pretty balanced day yesterday. Here's what yesterday looked like. There you have it. Very, very balanced day. If you look at this on a TPO chart, you'll see that it was a very heavy kind of consolidation day yesterday. Pulling up a TPO chart. Let me show you that for a second. There it is. This is yesterday. Pretty fat profile after what is an initiative trade the day before, and we expect the market to settle in and take a pause, which is why we had the kind of the sideways. I did expect it to make a run for the high into the close. My expectations don't really matter. I think it's confusing to people. I saw some comments as I was looking through the live chat yesterday, and don't take the scenarios as some sort of oracle future. This is how it unfolds on this breakout day, given the lower highs, given the way this opened and the weakness we saw. The expectation is we were likely to push lower as we were seeing failure by buyers to lift. And somebody commented that they lost their ass because they got short, and I was wrong. And it's because there's a belief, I think, that certain people must know what the market is going to do. And I'm sure there are people that have a very, very good idea of what the market's likely to do. They control a lot of the capital, but they also don't know what's really going to happen. Just like with GameStop, that enormous fund, multi-billion-dollar fund, did not know that it would be caught in a short squeeze on its options, on its stock, being short the stock. Like, even if you're well-funded, you don't know what's going to happen. It's not possible, because the market represents people and their feelings about certain things that are traded in terms of shares, contracts, whatever it is. So I don't know what's going to happen. So it's really important to recognize that the scenarios are just a plan. What's going to happen in the field when we are in the middle of battle, I don't know. I still rely on my stops. This is why, if I knew, I would never use stops. But I have stops. I have to define risk. I have to define what the R factor is for each trade before taking it. If the R factor is not there that I need, then it's not a good trade. I shouldn't take that trade. It's a gamble. So overall, the idea is to look at how the auction is unfolding, the narrative, and then to guess where it's likely to go, because it's what causes us to be strong about holding our positions, to have a little more conviction in the trade. That's not the only way to trade. There are other ways to trade. There are ways in which you trade statistically, like a stat arb, or a black box type of environment, an automated system, and you're just relying on certain behaviors and statistics purely. I'm doing a combination of that. It gives me a lot of flexibility and stuff, and I'm sharing that with you every morning. So I don't expect the market to do what I do, but I have a plan for it, and that's the part that makes my approach and the way I trade durable, regardless of volatility, market regime, whatever issues that might exist within the economy. I'm able to just follow price, And the idea is that if my thoughts on what the market's going to do, or if my plan, one of my plans starts showing up in the market, and the market's it's aligned with the market, then I start to trade my plan. So I start to set targets and expectations based on that plan. Still may not hit them, but I have a plan. So I wanted to explain that real quick because it just seems like folks are getting confused by the fact that they think just because I put a line there, that's what it's going to do. That's not how we trade. That's not how to sustainably trade. So you can see there's quite a bit of balance here yesterday. Balance is likely to lead to imbalance, especially if we open inside. So if we had opened inside of here this morning, somewhere between the 55 to about 75 range, if we had opened in here, I would tell you the narrative would be, hey, this is accepting balance. It is likely to be a maturing kind of consolidation type day. But because we're trading up here, we're currently trading at 44.6475 right here, right against the prior high. It tells us the market's imbalanced. Now look at this profile, and this is a quick lesson in market profiling, auction theory, volume profiling. Look at this profile. This is acceptance. This will likely act as a magnet. We are opening just slightly above there, and so we are in we're in the April 7th and 8th kind of, or 11th, is it? Let me see, April 11th, is it? Whatever this day is. Let's see, 10th, okay. 10th, no, can't be 10th. Anyway, whatever this day is, we're opening inside of this. So we had a couple of days of trade overlap right here with a weakish high at the top at 44.16, and we are opening inside of that. We have the 4,500 above, which is a huge magnet. We expect that we are likely to test lower this morning. And so the idea is to look for that this morning early. Look for a test back into yesterday's range. It is a balanced profile, so you're going to be looking for your value areas to get tested. The value area in TPO is 76.25. Value area in volume-based profiles is 72.50. So 76 to 73. Look for that to act as support. If it acts as support, then we're looking to take a long and to get through the 4,500. These are kind of the rules and the ideas based on how the market auctions. And you should just expect that it's likely to bounce. If it does not bounce, then it's likely to test the point of control on the other side of the range, the other side of the value range, which will be 44.58 to 55, somewhere in there. So we want to see this morning early on, and this is the actionable information, some actionable information that what I'm talking about here. We want to see early on, does it get back into yesterday's range? If it does, we know it's a balanced profile. We know we have a very well-defined value area. If it gives up value high in the 75 area, then I have a shot at 58.55 down below. Keep an eye on the 66.75. That was last week's, the prior week's high. But I'm looking for that to kind of trade through. So if you look at yesterday's profile, you can see, or you look at yesterday's trade, you can see that it really was very, very balanced. It was swinging all the way through. It took forever to get the IB break. Lucky enough, this was narrated. We're able to catch the short here yesterday into that 44 area, into the 44. Good short there, and then it just bounced right back up into the mid, and then it finally went through and just consolidated into the closing at 44.55.50 and settling at 44.55.75, something like that. So yesterday was very, very balanced. That's the point I'm trying to make, and we're opening in a gap above. So we're looking for yesterday's action to be somewhat of a support for today's rally, and we're looking for the market to push. And pop quiz, if we push through, and I gave you the answer just a little bit earlier, if we push through, what is the target up above? I gave you this in the Edge Pro X TPO. What is the target, the key target above 4,500 if we take 4,500 out? Take a quick guess what that is. We take out the 4,500, which we got close to overnight. Overnight high is 98.25. What are we targeting? If we are long into that trade, what is the what do we want to hang on for? Nice. So I'm going to give you a bit of an applause here. The answer is 45.16, 45.15. You want to hang tight in there and look for that double top to be tested. And because it's a double top, it's a weakish high, and we look for the market to poke through to test to see if there are further buyers above there. It may push through, or it may poke and fall off. Good stuff. I'm glad you're listening. So let's take a quick look. I just want to show an overview. Oh, relative delta. This is kind of interesting from yesterday. I talked about this a fair amount yesterday. I talked about how really a strong delta spike, especially at 6:30 or so Chicago time, not getting much participation by the very large lots. You can see the very large lots there. And then during balance yesterday, this is kind of interesting. During the balance period yesterday, we had the delta, which is the blue. Let me see if I can zoom in a bit, which is the blue and red. This is the cumulative delta. You can see that the cumulative delta was selling off, right? Small lots in control. But look at what the very large lots were doing. Just wait for it to sell off, buy some. Wait for it to sell off, buy some. Wait for it to sell off, buy some, and so on. And nothing given up on the close. So larger traders were positioned for a long. And of course, they got paid on the Tesla news this morning. And then we start the clock over and we look at what we've done so far this morning with Delta, and look at what's happened here. A very large lot participation, not much in the overnight session, just because the filter there is 100 lots, and the overnight session doesn't have that much volume. But it's been pretty strong Delta coming into the open this morning. And much of it, again, is small lots. To me, this looks like it is likely to revert on the open. It is likely to revert. It's relatively strong. It's not too strong. Delta's sitting at about 2,900 currently. But pay attention here, because how that's positioned and how it balances out makes a difference to us as to what we should expect. We see that there's a little bit of a large lot participation here. Why isn't this clearing? Relatively, there's a little bit of large lot participation in this rally. Look at yesterday. What a messy day. This is a 30-minute chart consolidation. We have a double distribution profile in the overnight session with the point of control and VWAP right at 44.85. which is yesterday's high. 84.25 is yesterday's high. So the early LIS, I don't know why this is not clearing. The early LIS, the line in the sand, is going to be right here, right? Oh, that kind of moves up a little bit, but the 84.85, pay attention. If it gives up to 84.85, another pop quiz, it gives up, we open up, we test higher, we come down to 84.85, we fight a little bit, and then we fall through 84.85. What's your expectation? What's your plan for what happens once we fall into 84.85? Then we're looking for what I talked about a minute ago about the TPO chart, the value area, the balance, the fact that we have value, we have a magnet down below. So if we give up to 84.85 this morning, Try not to get long into the drop. It may bounce and come back in, but what I would suggest is wait for it to bounce, wait for it to come down, bounce, put in a higher low. Then you have some substance to trade against for the long. But here it is likely to push through to value high at 75, right? It's likely to push to 75. Then you have 67, the prior week's high. And then if it gives up 67, you have 55, which is yesterday's value low, 55. So now you've got very clear, this is how the plans are created. This is how I draw the lines, right? It tests up, falls back in. I expected it would likely fall back in on a poke above 4,500. Fights the 84, comes down, fights the 67. The 75 area isn't able to find buyers, and then I expect it to bounce around the 67, so you get a wiggle there, and then 55 would become the target. On any shorts, the big target becomes 55. Okay, so that's the scenario, the selling scenario. The main scenario is likely to be a test, because we have not given up the high here. A test up, break the high into 4,500, pull back, and then make a run at the 4,500. And then again, if it makes a run through the 4,500 and holds a bid, then we're looking for 45.16. And so the question is, how do we know that the 45.16 is likely to get tagged? And my answer is, look at the low. If it bounces off of 85 and then you have 45.16, that's basically a 30 points of range. Is 30 points of range possible during the RTH? If that low remains put, will you get 30 points of range? Yeah, you will. That's well within the statistical range of a day. And so you don't give up the trade. You don't give up the trade until it takes out the low. That's how we trade strong. No scenarios for today. Don't forget to register for today's webinar. I'm speaking today at 1 p.m. Eastern about growing a small account. You can register at go2ct.pro/growing-a-small-account. Be sure to be there. We'll be talking about the pieces you need to put together, either as a veteran trader who's kind of struggling with the current volatility or somebody who's new. I want you to put the right pieces together in order to have a sustainable ability, or the ability to really grow a small account. Keep your losses to a minimum, hopefully through this process. Okay, very important to watch this. Good luck, and I'll catch you. We'll catch you at today's webinar, 1 p.m. Eastern. Take care.